Welcome back. As promised, our research team is standing by with CNBC-TV18's top 10 stocks for the day. Sonia, you go first. Tell us about Tata Motors.
Well, it was a good quarter for them, better than what the street was estimating. So I'm going with green on the stock. The JLR guidance was retained for the quarter, but the only issue is that the management commentary was a bit cautious. They did say that there are demand headwinds that they see in China and Europe for the JLR market, and the customer acquisition cost has become high. But leaving that aside, the numbers were quite good actually. The revenue went up 6% year on year on a consolidated basis. EBITDA was up 19%. The margins went up 170 basis points year on year at 14.6% overall, and the profits went up 74%. Now, a lot of brokerages have raised their target prices on Tata Motors post the numbers. Jefferies has raised it to 1,330 versus 1,250 earlier. Nomura has revised it higher to 1,303. Everyone speaks about how Tata Motors is seeing, better profitability in the JLR business. Yes, there are some headwinds which the management has been cautious about, but otherwise they are on track to meet their full year guidance as well. So I'm going with green on this stock.
Okay, all right. Thanks a lot for that, Sonia. Well, the other big name will be ITC. Manglam joins us to help us with a quick analysis. Morning, Manglam.
Good morning. So it was good internals that came in from ITC. You know, if you look at the revenue that came in at around 17,000 crores, the street was working with a number of 16,700 crores. EBITDA, one would say that it's close to 6,300 crores versus expectations of 6,400 crores. And as a result of which, there was a mild miss on both profits as well as margins as per our expectations. But that was led by the non-core segments of the company. If you look at the cigarette business, volumes at 2%, absolutely in line with expectations. FMCG, in light of the consumer environment, pretty resilient, 6% growth versus 7 to 8%. Hotels and agri revenue actually beat street expectations, but paper business was weak, and that actually led to the EBITDA miss as well. Paper EBIT was down 45%. The margins came in at 13% versus 22%, and as a result of which, the overall EBIT was lower. Agri business as well, margins were a little lower as compared to year on year. What really stood out was the cigarette business. Out there, the operational performance grew by about 6.5% versus expected 4 to 5% growth. And at the same time, the premium end of the business is doing a lot better, telling you that margins out there are resilient as well. The stock has rallied, but still at 28 times. Maybe we see some green today.
All right, Mangala, thank you very much for that. Let's revisit Sun Pharma. Numbers came during the last hour of trading yesterday, but Ekta is here with more detail. Ekta, morning.
Morning. Well, a couple of conference call takeaways. So the one negative which came out from the conference call, and it was in the press release, but maybe the street will probably take more cognizance of it, is that there is a preliminary injunction which is filed in a US court to prevent the launch of this particular drug that they've received approval for, Leqselvi, for alopecia. So it's supposed to be a big drug for Sun Pharma, but the company did indicate on the call that they cannot talk about when the timeline for launch would be now. The company, however, intends to rigorously oppose that motion. They are expecting a step up in R&D costs in subsequent quarters. The guidance has been 8 to 10% of sales. Taro is now a wholly owned entity by Sun Pharma. Both the teams are working on integrating Taro and Sun Pharma. They will request the US FDA for a re-audit of Halol, the Halol facility, which has an import alert since 2022, and only when they are 100% sure. They are expecting it shortly, but just because of that preliminary injunction, I expect the stock to probably be a little subdued on account of that.
Okay, thanks a lot for that. I'm watching out for 3 auto stocks this morning. Maruti, I'm going with red over there because the sales in July were below street estimates, and in fact they were down year on year as well. Total sales down 3.5% year on year, coming in at 1.75 lakh units. We do know that the domestic passenger vehicle market is going through a slowdown currently, and that's reflected in the numbers, so I'm going with red over there. Even in the two-wheeler space, actually, both Royal Enfield and Hero MotoCorp saw a degrowth in their sales, so I'm going with red on both those names. Royal Enfield sales down 8%, lower than Nomura's estimates. Hero MotoCorp sales down 5.5%, going with red on these 2 stocks. So all 3 stocks, in fact, in the red this morning.
Okay, all right, Sonia. So we got those auto names. But coming back to you, Manglam, Kalyan Jewellers, they give us the cheat sheet, but the numbers as well look good.
Yes, the numbers, reported numbers are in line with that cheat sheet, and more importantly, the internals are good as well. The company had already given us the update. Margins are lower as expected, and that's largely because of the higher share of revenue coming in from the franchise-owned stores. 26.5% revenue growth, 16.5% EBITDA growth, and 24% net profit growth. Not a bad one, given there were no festive seasons, etc., or big days in the first quarter. The same-store sales growth at 10% stands out. South business showed an 18% revenue growth, whereas the non-South business, where the company is focusing, grew 42%. Even the studded share actually grew 35%, and that's a positive too. Way forward, the company is guided for mid to high single-digit same-store sales growth, increasing the share of revenue from non-South geography, and also looking at sale of some immovable non-core assets in FY25. Were that to happen, that would be an additional kicker, going with green.
Mangalam, thank you very much for that. But let's also talk about Zomato, because numbers came yesterday, again during market hours, but I reckon a lot of chatter continued through the course of the evening on social media, etc. Those Blinkit numbers, and I think it continues this morning into this morning as well. Take it away.
A lot of chatter, and more importantly, the presentation actually came post the market, and there was some interesting insight. The food delivery grew about 26.5% on the GOV basis. Jefferies was expecting a 20% growth, so that was a positive. And the company said that it's compounded at 30% over the last 5 years. There's no reason to believe it won't continue. That's a positive, and they're on track to getting 4 to 5% adjusted EBITDA margins out there. Blinkit, that was the standout performer. GOV up 130%. The street was working with a number of 120%. And the company has revised their 1,000 stores guidance by 2025 to 2,000 stores by 2026 with profitability. So that's the big positive out there. And they've said that the GOV per store has increased to 10 lakh rupees per day as against 6 lakh per day last year. And for the top 50 stores, the gross ordering value per day on Blinkit is 18 lakhs. So that's a positive. And most importantly, they've also seen increasing use case in going out when it comes to movies, sports ticketing, live performances and shopping, for which they are going to announce the District by Zomato app. Remember, earlier the company had confirmed that they are in talks with Paytm to buy their ticketing business. Could this be one of those? Will be very crucial to monitor. See green on Zomato today too.
Okay, see green on Zomato. Lots of brokerages have raised their target prices on the stock. Motilal Oswal has a target price of 300. Which is, I think, one of the most aggressive on the street. But Ekta is back with us to talk about Indegene. Ekta, over to you.
Well, yes, recent listing coming out with its Q1 numbers, revenue up around 11.4% year-on-year, margins 19% versus 16%, so improvement there. Profit up 28%. The company says that now they are a zero-debt company. They anticipate that the financial leverage will be driving a stronger profit going forward. Anticipate that the EBITDA margin could have a similar trajectory as FY24. They overall expect a stronger second half versus the first half.
Okay, thanks for that, Ekta. Well, let's go back to Vivek. He's here to tell us about Netweb Technologies is looking to raise some money. Morning, Vivek.
Well, good morning. That's right. A block deal is expected in Netweb, where the promoters are looking to pair stake. Remember, they hold over 75% stake in the company. They're looking to pair close to 3.4% equity, and this is likely to happen via block deal. So 4 promoter entities, all of them will be pairing part stake. The floor price for this particular deal is at 2,180 rupees a share, which means that the total offer size is over 440 crore. Expect this particular deal to put some pressure on the stock on the back of the discount given.
Okay, thanks a lot for that. Here's a quick recap of our top stocks. Stocks with positive news flow: Tata Motors, ITC, Kalyan Jewellers, Zomato and Indegene, while stocks with negative news flow: Sun Pharma, Hero, Eicher Motors, Maruti and Netweb Technologies. But let's also get a quick handle on what's happening in the world of commodities. Manisha Gupta is joining in. Manisha, what are you looking at this morning?
Well, I'm looking at the crude oil prices, Sonia, because we are looking for a 4th weekly decline on this one. This is the longest losing streak since December 2023. And yes, there are weak manufacturing data that we have seen from US, from European Union, from Asia as well. When you look at the China fuel oil import itself is down by 11% in the first half of 2024. So various factors which are weighing on. Of course, the concerns of broader conflict in Middle East is something that keeps the prices supported as well. But a sector that clearly is rising today is the precious metal prices. You have gold trading very close to its all-time highs. Silver prices have gained up by more than a percentage point in the Asian markets right now. Most of the banks and brokerages still reiterating that we are looking at all-time highs anticipated in this year and the next as well. And with the kind of confirmation or the Fed futures probability showing 100% possibility of a 25 basis points, even a 29% minor there is something that clearly has been supportive. For today, it's going to be the U.S. non-farm payroll data today in the evening. All eyes onto that data.
Okay, all right, Manisha, thank you very much for that. So that's the big one that we'll watch out for. We'll take a quick commercial break here. Siddharth Khemka of Motilal Oswal Financial Services joins in on the other side, and we discuss individual stocks with them. Stay tuned.